let me share my screen for my presentation. Just a second. I hope you can see my screen. Okay,
Yes,
do you see my screen?
Yes, we are.
Yes.
Okay. Okay. So, thank you, FCOM, for inviting me. Just sorry. Sorry about this. It's just at the end. Okay. Fortunately, I cannot show my screen. Here we have a very short movie for the introduction of FCI. I want to play it.
Unfortunately, we cannot hear the audio, Betül. But this is because I think one needs to press a button before. However,
Sorry, you don't hear the voice?
No, we don't hear the voice. Normally, when you do that in Teams, there is something that you have to press before.
Sorry.
That's okay. I just wanted to let you know that this is.
Okay, then I start my presentation. But you hear my voice now.
We hear you perfectly.
Okay,
Yes.
just it was just a very short movie for explaining FCI, but I will also explain explaining who is FCI, who we are, what we are doing, and maybe a little bit about the importance of the association like us. We are the representative of the receivable finance industry, the biggest association in the world. Our core focus is factoring, invoice discounting, and other supply chain solutions. So FCI is the global voice for the open account receivable finance. Today, as I mentioned, that I am participating in the ICC conference here in Dubai, and also I am participating in many other meetings in my responsible area. It is really important to have the local association and association like FCI, International Association, for supporting especially the emerging countries for the presence of the open account finance solutions, supporting the infrastructure of the countries, working with the governments, working with the international investment banks is very, very important for the countries' economies. So our vision is to be the global association for the open account receivable finance. Let me say a few words about the FCI organization. On the top of the organization, we have Consul. Of course, Consul represents all the membership. Under Consul, we have Executive Committee. And under the executive committee, we have technical committees in FCI. Technical committees represent all the members, and the members of the technical committees are also coming from the members. We have legal committee to support all members if they have any legal questions, legal technical problems. And also, we are also supporting the regulators in the countries that we are operating, government representatives with their legal infrastructure. We have Business and IT Solution Committee, Marketing Committee, Education Committee, and ad hoc committees like Supply Chain Finance and Compliance. What is our 6 pillars? I think the most important thing is that we are providing the service of the infrastructure for communicating all of our members with our system, EduFactoring. It's a web-based platform, and we are serving for the receivable finance and the payable finance on the reverse factoring side. We are also supporting our members on the legal side for explaining the assignment condition, notification, regulation, and also another pillar is the education. We have a wide range of education, the product, risk, legal, sales, understanding of the all the markets, how they can launch the open account receivable financing and supply finance. I think education is the key, one of the key point of success of the companies and also the countries for launching their open account business. And promotion, we are working with the investment banks like EBRD, ADB, IFC World Bank, ITFC for promoting the industry, working with together with the governments and regulator to build the infrastructure in those countries. And when they have the low factoring infrastructure, we also support their education. And compliance, of course, compliance is another very important issue within the membership, within the countries also. So we are giving all support to our members for the KYC, AML issues within the membership. And influence, FCI is announcing the statistics of the factoring industry every year. And our membership represents almost 85% of the world factoring volume. We are lobbying with the all stakeholders together for the global advocacy. Let me say a few words and give some data for the growth of the factoring industry in the world. This is the global factoring volume for since 2001 to 2021. Unfortunately, we are announcing the last year before the statistics like end of May. So we have only 2021 figures. But in general, this is the 20-year compound annual growth rate, which is 8.2%, which means it is very, very satisfactory increase. The only decrease the year is the 2020 with the effect of the pandemic. But on the yearly basis, for the last 20 years, 8.2% increase on the global factoring volume, which means that it is even more and more higher than the emerging countries' growth rate. Here, and you see the different colors. With the purple one, you see the percentage of the business on the international. It's like 20% international, and the rest is 80% is coming from the domestic business. For the understanding of the global market, this is the statistics and the market share by the region. Here is the Europe region with the 69% market share coming from Europe. Europe is our biggest market and the oldest market, and still the growth rate in the European market is 14.8% for 2021. And for North and South America, it's North America last year, the year before is 2021. They really make a really good turnover. Still, in the America, the factoring business is quite small. We have almost in North and South America in total is 6% of the total turnover. And coming to the Africa is very small market still. It's also very promising. It's on the next 20 years, the increase of the African input of the total GDP is expecting to increase 15%. So our investment is huge in Africa. We are partnering in Africa with the African Exim Bank. The increase is 28%, but still the market share is still 1%. But my expectation, because I'm here in the Middle East for some time, for the last 5 weeks, I'm spending in different countries in the Middle East, and the turnover, trade turnover is really increasing to Africa. I hope this amount of the total turnover will increase in the coming years. And Asia Pacific is our second biggest market. Of course, for 2021, the increase is 7.7%, but of course it is because of the pandemic. Last year, they recently go out of the effects of the pandemic, so our expectation for 2022 will be much higher for the Asia Pacific region. Is still the turnover share is 24%. And the Middle East, unfortunately, there is a decrease on the turnover of the Middle East. I will explain the new developments in the Middle East market. But what I witnessed for the last quarter in the Middle East market, there is a huge interest for the open account, receivable and the payable finance in the Middle East market. And in total, the total market was 3 trillion euro for the 2021. Let's see some details for the Europe factoring statistics. As I mentioned, the total increase in the European market is 14.8%. All markets turnover is very satisfactory, even they are very old and they are very big countries on the GDP wise. In France, the increase is 12%, Germany 12%, United Kingdom, they experienced decrease for the last 2 years before the pandemic because of the pandemic and the effect of the Brexit, and the market recovered very fastly. The increase was last in 2021, 20%. Italy 10%, Spain 9%. So it is the other markets also in the small countries of Europe. It is the increase of the business is very satisfactory. In general, it is 18%. This is the Asia factoring statistics. As I told, it is 7.7% in 2021, the total increase. China is the biggest market, of course. We have 55 members in China. And also domestic business is huge, but of course the pandemic effect still continue in the Chinese market, but it's a huge development for the open account, and they also reverse factoring for China. Japan, Taiwan is also a very big exporting market in the region. So the increase is very high. In Hong Kong, because of some political issues, we experienced loss for 2021, but 2022 last year, Hong Kong market also recovered. This is the African factoring statistics. As I told, the amount of the total turnover is quite small. but the increase is increase of the understanding of the open account is very high in African market. And also we recently in 2018, I will mention the product Islamic International Factoring, and the understanding of this product also increasing in the African market. So when we look at the South Africa, 30% increase for 2021, Tunisia in 90%, Egypt 20%. In Mauritius only we experienced those, but in the other countries of Africa, the increase is 7.8%. I want to say a few words about the FCI membership. Here you see the increase of the FCI membership in all around the world, especially for the last 5 years' time. We can say that the increase of the membership is coming mostly in the emerging countries, because there's a huge investment, especially from the investment bank, for understanding of the open account, and the membership is increasing from the emerging market. Very shortly, we have 4 types of membership in FCI. Associate and affiliate members. These are the 2 main membership. Associate members are the trading members in FCI, and if this trade is over some turnover, they become a full member. So these parties, the trading members, they are trading under FCI, so they are actively doing 2-factor business using with the EduFactoring. And non-trading members are the affiliate members. They have an access to database, rules, education, and know-how of FCI. And the other ones is the sponsor members. FCOM is one of the sponsor members. They are the service providers to the industry. They are sharing their knowledge with the members also. So here is the distribution of our membership. You see the blue parts is representing the FCI members active in 2 factors. So they are actively trading within the FCI membership using with the EduFactoring. And the purple ones, they are FCI member but not active in 2 factors. In short, we have 400 members in 92 countries as of today. We are representing FCI with 6 regional chapters. I am representing the Central Eastern Europe, Southeastern Europe, and the Middle East. So, what does this means to the members? I am dealing with all the governments, regulators, members, with all the problems, promotions, everything. And also we have 1 regional representative responsible for Americas region, 1 from Western Europe, 1 from Africa, 2 from Asia, Southeast Asia, Northeast Asia, which means that we are really staying close to our members, their countries, their government representatives, regulators, to keep them without any problem and supporting their business. I want to say a few words for the understanding of our participants today. The similarities between FCI and ICC, because normally the participant coming from banking industry, this slide usually helps them to understand how we are structuring our business. As ICC, they have standard rules for documentary trade, UCP 600. We have standard rules. FCI is the owner of the general rules for international factoring. We shortly call it GRIF. So all the members, if they are trading under FCI, they are working under the GRIF rules. We have, like ICC, we have standardized global platform. As they have suite, we have edufactoring.com. It's a web-based platform. And all communication except the money transfer is under the EduFactoring system. We have, like ICC, we have our own arbitration rules and arbitration solution, and the arbitrations are decisions are binding for all the members. This slide shows the penetration of factoring per country. I think for for understanding of the volume of the business, because when we are saying $3 trillion is in $1.4 trillion, maybe it doesn't make any sense for some of the participants. This is the penetration of GDP for understanding in any country's potential. Let's look at the penetration of the factoring business in the world here. It is 3.9% for 2021. And for the Europe, it is 9.6%. So for the developed countries of Europe, it is it's 10 to 15%. Even in Belgium, it is 18.8%. In UK, 11.7%. So you see, these are the huge economies, and the penetration of factoring volume is very, very satisfactory. In Spain, it's 15.8%. In Poland, 13.3%. So it is for the countries, their factoring is maybe new, or they are just starting the factoring business for the banks. Even if they get the 1% of their GDP, they can target this amount of the total volume. For example, the emerging country like Turkey, it's a well-developed market for factoring, very well infrastructure for the factoring law, digital solutions. There's a huge potential for factoring because it is the total factoring volume is 0.2% of the total country's GDP. This is the factoring products year from 2021. This is the statistics coming from our membership. You see here the volume of the 53% of the total volume of factoring coming from non-recourse factoring with credit protection, which means that the companies, the corporates, request more and more secured products. So they usually, it was the year before, it was like 54%. There is very slightly decrease on this, but the demand on the product wise, it is a secured factoring with the credit protection. So the other one is the invoice discounting. Of course, in some countries, invoice discounting is the main product, but in generally, it is the second 18% is coming from invoice discounting. And 12% is from recourse factoring without credit protection, and 17% is coming from reverse factoring. But when we look at the increase rate of this of those products, of course, reverse factoring request is much more higher than the other products. This is the late payment statistics from the FCI membership. Of course, we experienced during the pandemic, in the middle of pandemic, you see that the late payments is 38.6%, but it decreased very sharply. So in the 6 months time, it decreased 10.5 days. Now it is 11.1 days. So it is, and also I want to say during the whole pandemic timing of the almost 2 years. We don't have any arbitration cases. Even there is a almost 14 days late payments. Our members, the members of FCI, because you may remember in some time period there is no transportation or even communication within the exporters and the importers. We don't have any arbitration case or disagreements within the membership. So the system is working very well. This is the dilution rate. It is almost the same when you log the information. It's almost the same. June 2020, we see the dilution rate increase 6.2%, but now it is the success of the, I think, the two-factor system. It is 2.6% by the end of third quarter of 2020. This slide explains the trends of the receivable trade, other trade finance products. I think this is important for the importance of the credit insurance and the cross-border factoring. I especially want to mention that the credit insurance and the international factoring is not, they are not competing products. On the contrary, we are working together with the credit insurers. Mostly all of our members, they are providing credit guarantee depending on their credit insurance guarantee schemes. So what is important here, this is the increase of all the other forms of trade finance product. You see here the letters of credit. So for the last 10 years, the only product decreased it's a minus of 0.4, decreased the importance and the turnover is letter of credit. So it is letter of credit, of course, losing its momentum, and which means that the world trade finance is going more and more on the open account, which means that the demand for open account, demand for factoring and reverse factoring is increasing. So here is the global factoring volume increase is 2.1%, and credit insurance need, of course, because of the lots of problematic years that we passed by, the increase is 5.3%. This is our estimation, global estimation for the receivable finance market by 2030. It is the total of the receivable finance market. We are talking about $6 trillion market, and 3.5 trillion is, I already mentioned in the first slide, is coming from the factoring turnover, and 1.5 is coming from reverse factoring, 500 billion is coming from asset-based lending, and $1 trillion is account receivable securitization. By 2030, receivable finance market estimated to exceed $10 trillion, based on a 6% compound annual growth rate, which is very optimistic, maybe, because it is usually we are experiencing more than this over the next year. So accounting for nearly 10% of the global GDP, the total receivable finance market. I want to say a few words about the two-factor international factoring. As I mentioned, we have two important system I want to mention. One is the general rules of international factoring. It of course defines the roles and responsibilities of the import and the export factor, and regulates the international factoring transaction. Of course, without FCI rules, general rules of international factoring, you can do the international factoring with your correspondence, but under the general rules of international factoring, it saves for most of the risk of the international transactions. And edifactoring.com is our system owned and operated by FCI and used by its members. It's a web-based communication platform for the cross-border trade communication, and all communication within our membership is under edifactoring. What I mean by saying communication, building the correspondent relation, providing the credit line, sending the invoices, sending the payments, only money transfer is on SWIFT. Except money transfer, all communication is on edifactoring. This is the FCI members export volume from edifactoring. You see it is, of course, you see the pandemic effect in 2020, but after the pandemic, the increase is very satisfactory. Also in 2020, we put here it's a two-digit increase for the edifactoring volume. So I just mentioned. This is the share of the two-factor export. Maybe for your understanding, because we have participants from different countries here in this conference, this is the share of the two-factor exports. Turkey is, since a couple of years, Turkey is the biggest share on the two-factor export volume with 17%. Spain coming on the second place, 15%, Taiwan 11%, Italy 7%, China 7%, India 7%, then Romania, Greece, Peru, Singapore is coming after the first 6 of the countries. And this is the share of the two-factor export. The first one is the Germany, and the USA is coming with the 27%, France 16%, Japan 6%. So you see the distribution of all the countries for the two-factor import factoring. Coming to the reverse factoring, it is of course the demand for the supply chain finance products increasing all over the world. The understanding also increasing, the onboarding difficulties experiencing in all over the world. So I want to first explain the understanding of the assignment-based product and the loan-based products. So on the left-hand side here, we have assignment-based products. So it is the two different supply chain products. The definition is important because on the assignment-based products, we are talking about invoice discounting, forfeiting, factoring, and supply chain reverse factoring, confirming, and approved payable finance products. Those are the assignment-based products. And then on the loan-based product, the loan advance against the receivables and invoice discounting, distributor finance, loan advance against inventory, and pre-shipment finance. Those are the loan-based products. The definition is important because in most of the countries, the understanding when we are giving the educations to the banks and the trade finance people, this definition is always quite different in different countries, but this is the definition worldwide that we are using for your understanding. So the advantages of the reverse factoring program, of course, most of you, I'm sure they're familiar of the advantage, but very shortly, for suppliers and SMEs, it is very important for SMEs, especially in the emerging countries, to benefit from the reverse factoring products. Because it is an off-balance sheet financing, and price is also based on the buyer's credit rating profile, which is very, very profitable for the suppliers and the SMEs, especially in the emerging countries, because they have a huge difficulty on reaching the financing. No credit study is usually required because the demand is coming from the buyer. It's usually short and simple documentation. I am sure the other speakers also mentioned about the software, about providing the software alternatives. But usually when you onboard the suppliers, the process is very short and simple. And absolute flexibility on the discount of the demanded invoices. Not all, but if the supplier demands, there is always a flexibility to use financing. So benefits to buyers. Of course, the working capital improvements for providing purchase costs. And if extension of payment terms is achieved, it is also benefit for their only cash flows. If early payment discounts could be achieved, it is also beneficial for the buyer. It is an improved supplier relationship. It is the supplier to keep supplier live, and if they solve the sustainability of the supply is very important for the buyers, because it is not easy to onboard new supplier to provide the input for their production process. The supplier sustainability is very important. So this kind of reverse factoring supplier chain products is really improves the supplier relationship. It also simplifies the payment process, and reconciliation benefits is also very important. Sorry. I want to give two information what we are as an FCI providing for the reverse factoring. We have two products for a 3-corner model and 4-corner model. The one is the software is supported by one of the software company, Demica. So FCI reverse supported by Demica, we have a solution. But for the 4-corner model, FCI members also benefit from the EDI factoring system. So we call it EDI reverse. Without any investment, as they already, our members are using already EDI factoring system, we have a solution under the EDI factoring. So they can use the factoring system for the reverse factoring solutions. Why it is important and what is the benefit? Of course, we are operating in 92 countries with 400 members. So those are 88% of our membership is coming from the financial institutions. So the import factors who wants to onboard importer, they have an access to almost 92 countries to onboard the suppliers on these countries. These financial institutions in different countries knows how to onboard, how to do KYC, how to finance the supplier. So I think it is very beneficial to use this network for the supply chain solutions. We have another important new product, Islamic International Factoring. I want to say a few words about this product. As I mentioned, GRIF is general rules of international factoring. And GRIF defines the roles and responsibilities of the import factor and the export factor, who represents the importer and the exporter. But there is no financing in the GRIF. So in this scheme, we don't have any financing. FCI is not dealing with the financing of the receivables. But this structure that we build under the rules of the general rules of international factoring, this is very fundable. Of course, financing is one of the main products of factoring. But as we are not describe financing, this scheme can be financed on a conventional way, on an Islamic way. So there's very few differences in between. So it is itself, GRIF is very Islamic. What are the differences? Not all goods and services can be covered in Islamic finance. So the GRIF has not a clear restriction. So in the Islamic International Factoring, you should define the goods should be halal good in this transaction. Export factor must be the owner of the receivable in the Islamic International Factoring. But in the GRIF, we also cover the cases of provision of assignment. So it is possible to, in the GRIF, it is possible to do factoring even there is a provision of assignment. So these are the two very minor differences from the conventional factoring system. So the legal committee of FCI, together with our Islamic members, created the supplementary agreement for international Islamic factoring. They work for the supplementary agreement, and FCI legal committee approved, and the council of the FCI approved the agreement in June 2018. There are some modifications in the GRIF, but lately last year in 2021 annual meeting, we all replaced the interest definition in the GRIF to late payment amount, which means some of our Islamic members are now today, when they are doing Islamic International Factoring, they are not using the supplementary agreement. What should an Islamic financial institution do before entering an Islamic International Factoring transaction? Just sign a supplementary agreement. This is optional. And some of our Islamic financial institutions even do not sign a supplementary agreement. They are doing Islamic International Factoring because now under the GRIF, everything defined very clearly and on a very the definition of Islamic rules. And what should the conventional import factor do before entering an Islamic International Factoring? Just signing a supplementary agreement, no more workload than the ordinary international factoring action, because it is if as an import factor, if they are receiving an application, a credit line application for any specific buyer, even the application coming from Islamic financial institutions or conventional financial institutions, they're processing the same thing. So there is no differences except the product definition. As I mentioned, conventional factors signing the supplementary agreement for Islamic international factoring, getting the agreement of Sharia board of the Islamic financial institutions import factor about the restricted goods and services. But there is no workload than the ordinary export factoring actions. I want to say a few words about the UAE factoring law. As we are discussing today for the development of the Middle East, I think the importance of the UAE factoring law for this region, for the Middle East region, is very important. It is a step for the future of the receivable finance industry. The law came into the effect by the beginning of December 2021. It builds on UAE movable security law and clarifies that future receivables can be sold before they came into existence. It's very important. This future receivables definition is very important for especially for the construction industry. And it's also bringing a greater certainty for the financial institutions and the corporates, for CFOs, the corporate treasurers and trade finances, to have the assignment right. And the law itself defines very clearly the right of the assignee and the assigner. And I think it is a very significant development in the UAE banking and finance legal landscape. And I think it is going to be the role model for the other region countries, because it is important to find the solution for the open account receivable finance. As I mentioned, the LC total the amount of the LC and the demand for LC is decreasing, and also for the domestic transactions, for SME financing, and also for the region, for the non-oil exporters, non-oil industry, to support the non-oil industry, to increase the factoring volume, and understanding of factoring is very important. So the law, of course, opens many ways for increasing the factoring transactions. Also, very shortly, FCI is also supporting and working together with the UNITRO for the factoring model law. It's already announced. This is very important for the countries who has a factoring law, but they want to improve their law, or the countries they don't have any factoring law and they want to implement the factoring law. This studies is very important. And we are sharing with all of our members for the details of this model factoring law. I think I'm out of time, so very shortly I want to say a few words about the organizational structure for the factoring companies, how we are how our members are building their factoring business. There are very successful models, but there are the different successful models. Separately incorporated company, bank subsidiary, or non-bank financial institutions, division of a bank, integrated into a bank activity. There are different organizations, but in different models, we have very successful examples. So what is the reason for success? The first one is the human capital. It is education and training. It is the most important part of the success. I believe in education, not educating of only the staff of the trade finance people, also educating the regulatory people, judge, the clients, also very important. But more important than this, it is the IT infrastructure. Without the right IT investment, the success is not possible. This is also my personal experience, and also what I'm seeing from different countries. The investing in the right factoring software is a must, and there is no U-turn on this kind of investment. So it is the understanding of the features of right software and implementing the right software is also very, very important. So thank you. If you have any question, if you have time, I can take the question, or maybe you can just write on the chat area. Thank you for listening to me. I hope you benefit from my presentation. Thank you.